welcome to today's video, which will be about what lessons we can draw from the unfolding stock market session and what this means for tomorrow's Fed Day preparations in S&P 500. So that's what this will be about. So let's move into this 30-minute intraday chart and what I see unfolding in S&P 500. So again, this is 30-minute time frame, and since the US Open there has been really good traction upwards, punctured with just one brief 2-3 candles consolidation. When it comes to sectors, the whole upswing is chiefly powered by tech, which is very meaningful due to its highest rating. And then what I looked for to happen was materials and energy. As well, it's good that communications have partially recovered from the heavy beating of latest days, but it's more important to me that the minus 0.5%, roughly speaking, downswing had been erased and is being worked on in financials and industrials, because these are to be those key drivers within non-tech, together with those two earlier mentioned that are firing on all cylinders. So that's what leans bullishly when it comes to the still solid and internally rotating finally market breadth. One could have expected a better showing from consumer discretionaries, especially on such days when consumer confidence comes this good. I hope you have listened to Monday's video where I talked expectations about this week's market data, all of them since Monday till Friday except earnings, and what I expect them to do to the general risk-taking and how they are going to turn out with respect to the general economy. So if you hadn't heard that yet, just review this recording as well. So, and the final piece of the bullish puzzle is that the defensive sectors such as utilities, real estate and healthcare, where I had been lately talking on Twitter, Johnson & Johnson for example, that they have not been doing overly stunningly well today. That means quite something with respect to bond markets, which I will talk further in the upcoming chart. But for now, the daily resistances that we had been having going into today, 4585 and 4592 if tech cooperates, and tech did prove it cooperated. These have now become supports. So this is especially valid for the pre-market session, and maybe as well when we go through the opening US session opening gyrations in ES tomorrow. And here comes the second intraday slide. It's again 30-minute time frame, this time of Nasdaq, and it shows quite something what tech stocks think about those rising rates in bonds and long-dated treasuries that we are witnessing today and had been witnessing lately. First they refused to decline further, and now they are kind of wanting to preempt tomorrow's move, because I think that once the Fed hikes by 25 basis points and we are done and through the opening volatility, especially during the conference, and it's quite usual, that stocks and risk assets would interpret the remarks and statement in a bullish fashion, and they would not really look to September or November rate hikes. This is still running on the disinflation theme, so it's too early to anticipate that, and it's quite nicely being reflected in today's sectoral composition, where we have bets on the Fed taking its foot off the pedal being finally reflected, especially in this tech chart. So that is what I expect, how I expect stocks to close today on the still bullish note, maybe a little consolidation after market, but Asian session should do well because of the Chinese stimulus trades continuation. So I'm not looking for a giant apple cart setback tomorrow before FOMC. So this is what today's video had been about. Thank you for, and I hope that you are already subscribed on my site for the daily analysis that form the basis. The same goes for these videos that are practically delivered on a daily basis as well, and that you follow me on Twitter and Telegram. Yeah, and one more important point, if you want me to talk, for example, gold tomorrow, please say so in the comments here. Alright? I will decide. I don't have any precise plan what to cover tomorrow, so maybe I will be guided by market price action, how that's gonna be interesting, or by what you tell me that you want me to talk about. So use your opportunity. Side times apply. Beware of impersonators. I'm pretty sure you are up to date with what's been happening on my homepage and with my professional history. And finally, disclaimer. Thanks, good evening, and let's keep talking on Twitter.